Hey everyone, this is Justin with DayTradeTheMarkets on Friday the 13th of April 2012. I wanted to take a quick look at the E-mini S&P from Friday and talk about kind of feed off of what we were looking at last night. If you saw last night's video, if you saw that, you'll probably remember that we were talking about this area in here from about 87.50 to about 13.77, and how the market was in a bit of a transition. And since it's hockey playoff time, I use the analogy of like a hockey game. This is kind of the neutral zone. We weren't sure, bigger picture, if the market was due for another run higher or due for another run lower. It looked like it was transitioning up, but for confirmation, we wanted to see some good activity above this 87.50. And if that didn't happen, and in fact we got some pretty good confirmation below this 77, that's a pretty good indication that we're out of that neutral zone, so to speak, and that bigger picture, we're thinking the market's more likely to be going down. And if you look at an overnight chart, you'll see the market basically traded in this neutral zone, so to speak, for most of the overnight. And then after we opened right above that 77, right in here. And with that said, let me actually put on another couple lines. We were also looking at the 74 area. And the reason I bring up these bigger picture support resistance areas and this bigger picture bias, it kind of feeds into the way that we look at the market, if you're not familiar with how we do it in our philosophy. But our idea is that we have various pieces of evidence from the bigger picture ideas that I was talking about, what we call intraday bias or bigger picture bias, and then these intraday or bigger picture support resistance areas. And those are levels that we talk about in our member center before every day. And again, going into today, our bias was mixed. We wanted to see if we could get acceptance below 77 or above 87.50. That would kind of give us the key on our bigger picture bias. And then we were also going to look at this 77 area and this 74 area, or the 87.50 area up higher, as potential barriers, bigger picture. So in addition to that, our software is pretty unique in that it gives us about 4 really cool real-time pieces of evidence from what we call Directional Bars, which is basically telling you, the market goes up if buyers are more aggressive. The market goes down if sellers are more aggressive. That's pretty much the only way the market works. And our software has 3 levels of both buying and selling aggression bars, from our light green, which is moderate buying aggression, to dark green, which is strong buying aggression, to what we call dark cyan, which is extreme buying aggression. And on the flip side, we have the light pink or light red, which is moderate selling aggression, dark red, which is very strong selling aggression, and then the dark magenta, which is extreme selling aggression. And this is a very good roadmap. So when one of these aggression bars forms, especially a level 2 or a level 3, we want to see which way does the market reject that, or does it have continuation. It's an outstanding roadmap. So that's one of these pieces of evidence. We also have what we call deceleration bars, which are these triangles or dots, and those are telling us basically when, for example, if you look at one of these bars, we have a higher high on this bar, and if the buying aggression was picking up with a higher high, it would stand to reason that we would have continuation higher. However, if we have a higher high but the buying aggression is actually decreasing or decelerating, it's as if the market is putting on the brakes. This is also a divergence, so it's actually showing that during this time period, there was actually, even though it was a buying bar, there was a higher high, there was actually more selling aggression coming into the market. So that's that. We also talk about the intraday support resistance zones that form in real time. Those are these green and red zones. And we talk about our intraday directional filter, which is kind of our path of least resistance on the short-term time frame, which is you can see we have the light red and the dark red. So it's basically telling us that all things equal, the path of least resistance today was bearish. And so the way we like to look at this is that in isolation, each of these pieces of evidence is great. It's giving you great information, but the real power comes when you have the patience and the discipline to wait for several pieces of evidence to come together. That's when you have high probability trading opportunities. Notice I didn't say 100% trading opportunities or perfect trading opportunities, but simply your edge is increased. And really as a trader, that's what you're looking for. So I wanted to show some examples with that idea in mind from today, because today really lined up nicely. Compare that to Tuesday when things lined up perfectly, Wednesday when nothing happened, and then yesterday we had what we call a conflict situation, and we're back to today where things lined up really beautifully. And so, for example, looking at this evidence again, bigger picture bias, once we got below this 77 level, bigger picture bias was down. Okay, so that's one check mark, so to speak, in favor of being on the short side. Shorter term bias, our filter, was either bearish or strongly bearish, basically the whole day. Again, telling us we'd prefer to be on the short side. Then, if you look at I was really, when this market first broke down through 77, it happened with some pretty good structure on a strong selling aggression bar. And so, what I was looking for early in the day was a test back up to this zone, because we had a short-term resistance area, this red zone, as well as this 1377, which was a bigger picture resistance zone. So you can see we had a lot of things lining up, or confluence coming together. Now, the market didn't quite get up to this level, so I didn't take the trade. We do have another trade that we talk about, we call fade the high velocity move, and I'm not going to get into too much detail, it's all in our training, but we have this high velocity move that comes in here, and when the market retests into this zone and decelerates, we know that's a pretty strong setup if you have other evidence. Again, you're not going to want to buy and sell all of these decelerations that you see throughout the day. That'd be insane, but they are really outstanding trade entry locations if you have other evidence lining up for you. Okay, so for example, another couple examples was, again, bigger picture bias down, filters negative. Right here around this 74, 75 area, we have a short-term resistance area. We have a bigger picture resistance area with the 74 level. Then the market trades up into this zone, decelerates, trades up in there, decelerates, trades up in there, decelerates, and so forth. Those are very high probability trade entries, because again, looking at this confluence idea where you're looking for many pieces of evidence to show up, this was kind of the perfect situation. I'll kind of review it again if you're new to what we do. Filter is bearish. Bigger picture bias is bearish once we're below this 77 level. We have a resistance zone, okay, that formed in real time. We have a bigger picture resistance area at 74 that we talk about going into the day, knowing that. We then test up in there and decelerate. So you've got 5 pieces of evidence all telling you this is a good place to be getting short. 5 pieces of evidence, this is a good place to be getting short. Do you see what I'm saying? I know, some of you are certainly are going to be able to get this. It's doesn't mean that trade's going to work out perfectly. It's just telling you that you have a lot of evidence lining up together, or what we call in confluence, that's giving you a high trade potential. So hopefully that makes sense. If you're new to what we do, I just wanted to kind of run over the basics. You can see some other videos below here. Have a look at that. Let us know any questions you have, but just wanted to kind of play off of yesterday's video where we talked about that neutral zone, and how once we broke, and how we combine the bigger picture analysis with the shorter term structure within the day, and when those things line up, it's pretty powerful. So hopefully you got something out of this, and let us know if you have any questions, and have a great weekend. All right, talk soon.